Hello traders, and welcome back to this lecture. In this lecture, we are going to be learning about our next indicator, which is the Bollinger Bands indicator. Now here on TradingView, just come to indicators and type BB or Bollinger Bands. You're going to see the Bollinger Bands here. Just click on it and it's added to the indicator. So this is a volatility indicator. It measures the volatility in the market. So you can also add the Bollinger Bands here on your MT4 platform. Just come here, insert, indicator, trend, Bollinger Band. Even though it's not a trend indicator, it's a volatility indicator. Okay, so it gives you options, period, deviation, and apply to, which is close. So let's just go back to TradingView. So when you double click on it, you also see the options for the Bollinger Bands. Now we have the time frame, which is the present chart. It's been applied to. We have the length, which is also known as the period or the number of candles to look at. Then we have the source and we have the standard deviation. We have standard deviation as 2 here, and then for offset and so on and so forth. So just click OK. So what is the Bollinger Bands, right? The Bollinger Bands is a volatility indicator, and then what it does is it plots a graph on our chart with 3 moving averages. So this is one moving average, second moving average, and third moving average. Now the first moving average is 20 period. All of them are actually 20 period. And what the two other ones, the ones on top and bottom, what makes them different from this one is they are plotted 2 standard deviations away from the mean price. Now the mean price is the average price. Now what's a standard deviation? What's a standard deviation, right? A standard deviation is simply a measure of how much data scatters around the mean. Okay, how much data scatters around a mean. Like I said, the mean is the average, so how much data scatters around the mean. Okay, so in this case, how much prices scatter around the mean. Now the data we are looking at here are prices of prices of the last 20 periods. So how much they scatter around this mean. Okay, so to understand the concept of standard deviation properly, you might need to do some research on Google. So when you Google it, you tend to understand that standard deviation is more of a unit of measurement, like I said before. So you have to be comparing a set of data. For this case, I'm comparing the last 20 close prices of the last 20 candles. So you have to be comparing a set of data. You have to compare a set of data. So for example, we could say we are comparing the heights of 100 boys. Okay, so of course, some would be taller and some would be shorter, but definitely there will be a range of heights where most of these individuals will be categorized in. So the middle, okay, where most people tend to fall in is known as the mean, okay? It's known as the mean, okay? And then there are usually extreme heights, okay, which are usually kind of not common. So we might have those that are very tall and those that are very short, and they are not common. So that's more of the extremes. So it's very unlikely to have a lot of people at that height category, right? So same as here, guys, it's very unlikely for prices to go above or way outside the outer bands, So that's the concept of this indicator. So prices tend to trade around the mean. So when using this indicator, you would want to use it more on pairs that kind of consolidate a lot, because trending pairs usually go beyond the extremes. Okay, so for example, if a market is trending heavily, it's very much more likely to continue trending in that direction rather than return to an average price or the mean. Okay, so let's assume we are using this indicator to trade a strategy where we buy at a point like this. That's a point where prices go outside the outer band. So when prices go outside the outer band, we then buy, and then when prices go away from this other outer band that's in the upside, we then sell. Okay, so that's one of the ways people use this indicator. This indicator, they buy here, they sell here, because when they buy here, prices have higher chances of returning back to the mean. Okay, so some will buy here and close here, and then sell at this point or at this point, and then close here. But of course, you won't always depend on this strategy alone to give you your entry signals. Like I said before, nothing is 100% in Forex. Nothing has it all. So in using this strategy or this indicator, you would want to be using it alongside other indicators. Okay, so you could also use it, let's say, in a trend, just to you have it as a guide for your trend. So whenever markets come here, you would want to re-enter for a buy. That's in an uptrend scenario like this. Okay, in an uptrend scenario like this, as you can see, whenever market came outside the outer band, it continued in the trend, and then whenever the market goes out of the upper band, it tends to retrace and then continue, and then okay. So these are some of the ways people could use the Bollinger Band strategy. There are certain pairs that will work very well with the Bollinger Band. That's with this strategy. These are pairs of currencies with similar economies. Okay, so when you get pairs like this, they tend to have a mean price. So they always try to return to the mean price. They don't stay at the extremes for too long. Okay, so this is called a mean reversion strategy, where you buy here because you feel this is an extreme price, and prices have the higher probability of returning back to the mean or to the other side. Okay, just like a rubber band that gets stretched and released. So whenever it gets stretched and then gets released, it tends to go back to its original position. Okay, that's in this case will be the mean. Okay, the mean, that's the middle, and then whenever it gets stretched again, it tends to get back to its original position. Now, when you use the Bollinger Bands in addition to other forms of technical analysis, you tend to get good entry and exit points. As for me, I really do not use this indicator very well. I don't use the Bollinger Bands, but a lot of traders use it, and it's one of the most popular indicators. That's why I have decided to introduce you to it. It might be the style you want to follow. So depending on what you want, whatever you want. So that'll be it for this lecture, and hope to see you in the next